Hello friends, IT stocks are having a free fall from last few days. After the quarter 4 result, even today Infosys fallen almost 9.5% and it is fallen almost 30% from its top. Even talking about TCS last week, it has fallen after the result. It is fallen almost 25% from its top. So what to do now? All these IT majors are falling and there is a weak quarter 4 results coming out in across the companies. So what to do from here? Whether to buy, sell, hold, that we are going to talk about all these IT stocks, mainly Infosys and TCS. I am going to talk in length about why it is falling and what is the main course of action from here as an investor. So stay tuned till the end. We are going to talk in detail about IT industry. Hello friends, my name is Tapan Doshi and I welcome to my YouTube channel. Please subscribe to my channel by clicking below link and let us start and going to the IT industry in detail. So talking about IT industry, first we are going to talk about why these IT stocks are falling. What is the main reason why these IT majors are falling a lot suddenly in last 1 or 2 quarters? So friends, let us go and check why these stocks are falling a lot. What are the main reasons? So the first reason is nothing but US and Europe slowdown. You know that after February 2022, once the geopolitical crisis happened, because of high metal prices, oil prices, everything, inflation started going up across Europe and USA also. It has gone almost 9% at USA level and almost 10-11% up to in Europe. And as a result, banks started increasing the interest rate because they want to tame down the inflation, and as a result because they were increasing interest and the growth was slowing down. And because of this, now US and Europe, you know that most of the IT majors like TCS, Infosys, HCL or Tech Mahindra and many other companies have a big exposure to US and Europe, and because they are slowing down, they have a adverse impact on the business of all these IT companies also. So that is why one of the reason is US and Europe slow down. Now it looks like the recession is near in USA and Europe is already in a recession period, and as a result lot more negotiation is happening at a contract level, deal level, and which is having an impact on the business, and many companies are holding back their IT budget. So that is also one of the reason of why things are happening, basically going worse for the IT companies. Second reason is nothing but broad-based hit to tech spending causes sharp revenue decline. So as I told you, because of this recessionary period, most of the IT majors and also the companies which are there in the US, they are cutting down their budget related to IT. The reason is simple, it's see, at the end of the day, IT infrastructure is an add-on. Okay, it's not a compulsion. And sometimes once they have a basic necessity there in their company, they will actually delay the add-ons and new features and everything. And as a result, there is a hit in the spending of all these companies, which is helping bringing a sharp revenue decline for all these IT majors. Again, muted growth and margin guidance. Now, all these IT companies like TCS, Infosys, which are the main companies which has come, they have given a much more muted guidance and muted growth also for the future. Normally, TCS do not give the guidance, but yes, Infosys is given a guidance which we are going to talk in length. But yes, the guidance which they are giving now is quite lower, and that is also basically bringing the stock prices much more down. Again, headcount addition moderated due to slowdown in demand. As and when, see, earlier you remember when everything was going good during the COVID crisis, a lot many people will be appointed and everything at the IT industry, lot many attrition was there. But now suddenly, because of this recessionary fear in USA, Europe across, headcount they are reducing. Even in USA, Europe also, many companies has literally cut down their manforce and everything. India still it's like a traditional company. They normally do not cut their employees. They do not. It's a different world compared to the Western countries, and as a result, but yes, the new recruitment is slowing down because slowed down in the demand across the world. Another reason is nothing but if you talk about on-site cost increase was a negative surprise. यानी क्या होता है कि sometimes these IT majors do appoint local employees also there. Suppose that it is operating in USA, so there USA also they recruit many employees from there, and they actually their inflation is going up, the salary goes up, and as a result that is having a direct impact on the profitability of all these companies. So that is having a negative surprise. Another point is strong deal wins but uncertain ramp up timeliness. Now what is this? Yani if they are getting the deal also, they are not sure whether this ramp up will happen fast or not. Because see, one thing is that you sign a contract, and one is real execution. Now even though deal wins are there, but if the execution is delayed, then the revenue also will come at a delayed level, correct? And that type of uncertainty is causing worry among the investors and the analysts that yes, there will be much more delay in revenue sharing and all that stuff. As a result, that is having a negative impact on the stock also. Again, the another point is a mismatch in revenue conversion of discretionary versus a cost takeout programs. So this is also one of the factor why no it is impacting the stock, and all these factors have a cumulative impact on the stock and the revenue guidance of the company and everything. And the last and main point is the question of credibility of revenue guidance. So the basically TCS is not given, but yes, Infosys has given a guidance which is around 4 to 7%. Now that looks quite ambitious, no, because no, for a company to have that type of guidance when the whole world is slowing down, no, so that is also the credibility of the revenue guidance given by Infosys is been question mark. So these are some of the reason, no, that is why the stock price is falling, even the all the IT stocks are falling. Now let us understand how the result has panned out for TCS and Infosys for the quarter four. Let us see the comparison. Talking about the comparison, guys, if you talk about dollar revenue sequential growth, it was merely for TCS it was 1.7%, and for Infosys only it was 2.2%. So you can understand the growth was much more at a lower side. 1.7%, 2.2% is not a great growth, and that is what the revenue growth is happening. Now normally we do normally check at a constant currency revenue level. What is constant currency? Constant currency is nothing but basically you are removing the all type of fluctuation coming in the exchange. So it comes to TCS only 0.6%, but however for a it's like a shocker that the Infosys was minus 3.2%. Now 0.6% is like no last COVID time, this is what the TCS generated that type of result, but for the Infosys minus 3.2% is the lowest among the last decade. Such type of impact has happened in these two companies. Again, talking about EBIT percentage change, EBIT is nothing earning before interest tax. TCS is for flat, but for Infosys it is minus 50 bps. Now minus 50 bps is quite a low growth, and no, basically minus 50 shows that yes, the margin is also shrinking, and that shows that it is having a direct impact on the bottom line of a company. Again, EBIT percentage for TCS is 24.5%, but however for Infosys it is merely 21%. So EBIT margin is also very very less, and one of the main reason why it is less, that yes, one is there is a revenue hit, and again the cost is on a elevated level because of the high employee costs and everything. Also attrition rate, that is only one silver lining, where now basically for TCS it is 120 bps, however for Infosys it is 340 bps lower, and that shows that yes, slowly and gradually attrition level is going down. So that is the positive sign for a company, that at least attrition level, because earlier it was much more on a higher side, now it is slowly and gradually going down. Again, as I told you earlier, TCS never give the basically guidance, but however for Infosys for financial 2024 revenue guidance for current year it was 15.4% revenue I'm talking on, which they are telling 4 to 7%. Now even the analysts are saying that 4 to 7% is also on a higher side, they cannot achieve the higher band of 7%. Such type of pessimism is there among the analysts also. Now, if you talk about financial 2024 EBIT margin, for Infosys it is 20 to 24 now, which is quite on a lower side, because uh, actually the margin was much more higher earlier, but it has come down a lot even last few quarters, and that is having a no basically negative impact on the growth prospects of these companies. Now let us see what is the constant currency growth of both these company. Now, if you talk about no quarter to quarter constant currency growth, you can see here no earlier the constant currency growth was above almost no around 18 to 19% for the TCS, which has come down, and at almost in March 20 when there was a that COVID crisis happened, it reached to March 20 or almost negative, but however then it shoot up because it was a small blink. But again at 70%, no, it has coming down below 10.7%, and now it is almost 8 to 9%. So this is how it has fallen. Even for the Infosys, if you talk about no earlier, basically yes, it was fallen during the COVID crisis, then it has gone up about 22%, but again if you talk about quarter to quarter, it has gone down almost 8.8%. Now this shows the way the constant currency is falling, and this is what is having an impact. Now this is nothing but a revenue growth I am talking about. Now let us talk about EBIT margin. Now EBIT margin, if you talk about, now for EBIT margin, you can see here earlier it was for the Infosys, of course this 2013 was around 31-32%. But if you talk about recent time, almost after COVID crisis, it was around 28-29, but now it has gone down to 24.5%. Even for Infosys, around March 21 after the COVID crisis was around 26-27. Now again it has fallen almost 21%. Now this shows that yes, there is a drop in the EBIT margin also, and that is having a big impact on the profitability of all these companies. Again, let us talk about attrition rate. Now attrition rate is the only silver lining which this company is having, because if you talk about attrition rate, it peaked around nearly 21.5 to 22%. Now it is gone down to 20.1% for TCS, and for Infosys it was almost around 28% now, but it has gone down to almost 21%, because there is a fall, and because of course there is a less demand, and that is having a direct impact on the attrition rate also. Because see, if the business is not so secure, more the employees will not go from here and there, and that is why it is having a one silver lining, that yes, attrition rate is going down. Now let us talk about the basically key assumption and the key basic metrics which will be there in for the next 2-3 years. So let us talk about and let us compare with Infosys and TCS here. Now talking about that, if you talk about as I told you, constant revenue growth, that is what you have to see. For 22 it was 15.4% for TCS, then it was 13.7. For current year it is expected it will be around 20.7. However, for financial 25 estimate from 13.7 it will go down for 7%, and 2026 it may be around 10.9%. You can see such a big drop. Even for if you see constant revenue growth for Infosys also, if you can see here, 20.1% for 2020 to 23 it was 15.4, but for the next year it is, as per their guidance, it may be around 4.9 to 5%. 25 it is 11.2, and maybe 9.4 for 26. So you can see such a big drop from 13 to 7 here, correct. Even here if you can see basically 15.4 to 4.9, correct. And that is what you have to understand here. Okay? There is a drop coming in the constant revenue growth in coming years. Again, let us talk about EBIT margin. EBIT margin, see, earlier it was on a 28.4, 27.7, 26. However, TCS basically is going to maintain that EBITDA margin and EBIT margin. EBIT margin we are talking about 25.3, 24.1. Again, 24 estimate it will 24.7, and 25 for 2025. However, for the Infosys, it will be it was around 23 in 2022, which may come down to 21.1, and around 21.7, 22.7, 22.6 in 25-26 estimate. So basically through this we come to know that yes, the constant revenue growth will not be so great as it used to be earlier. So now what is the conclusion here? if we go through all this, we feel that yes, there is a problem in IT industry. Then what we should do? Whether we should buy at this level because the stock has fallen a lot, or we should sell or hold. Then my opinion here is, my suggestion is that boss, IT industry has faced this type of cycle many times in the past. There are lot many times IT industry has fallen, but again it has risen because IT industry is overall in a long-term bull run. Okay, and you know the future prospect of all these IT companies remain good. So currently the problem is because there is a problem in US and Europe. The things are not so great, and things are not in a better way, and that is what it is causing a big problem in all these company. But my opinion is that if this stock falls a lot from here now, I think you can buy it, provided you are a value and growth investor from here, and you can stay for at least 1 or 2 years till the US and Europe things get settled down. And once the Nasdaq will move, these stocks will also move, because see, this is a rare opportunity where you are getting all these IT stocks maybe in future, maybe 30-40% discount. I think one should think about it. But yes, if you are thinking about next 6 months or 1 year, whether you will get a gain from all this stock, then I can doubt about it, because no, US and Europe will take time to recover. And unless as their main clients are there only, things will not be so easy. And all these are professional companies, guys. TCS, Infosys are there from last so many years. So if you want a decent return of 14 to 15% over the next 5 years, 10 years, you can easily invest in all these companies, because these are, basically sector leaders, and they know how to go through all the cycles. So my suggestion from here also, it may warrant around 10 to 15% return, both TCS, Infosys. However, for a long term also, you can think about it. As and when the stock fall, please go and you can invest in these stocks, because these stocks will give you a new opportunity to invest at a lower level. Again, as I told you, all thing is based on the how the Western countries are getting recovered, because most of their revenue are coming for that. Now talking about like TCS only, Northern America, their main revenue area, no, their Northern area, America has actually slowed down a lot, and that is having a direct impact on basically TCS. Similarly for Infosys, Europe and all that companies. So countries. So this is what is happening. They are getting deals also. It is not that they are not getting deals. They are getting deals also, but the uncertainty always remain the whether the things will be settled here or not. So my suggestion is, guys, that you can invest at a lower level if it comes, because IT will bounce back maybe in 6 months, 1 year, once the US and Europe things will get. And USA, Europe, there may be chances that, because if the Powell may start reducing the rate at the year end, okay, then the Nasdaq and everything will run, and these companies will also run. See, currently the fear is that they will have a nosedive in the recession, but agar wo hota nahi hai, and maybe in the year end things get settled, and once the rate cut happenings, then the things may start fast, and all these companies will again ramp up their budgets related to IT. And I think, of course, TCS, Infosys will be beneficial of it. So as I told you, if you are a long-term investor, stay invested. You can add more at this level, and if it is going down, you can add more. And if you are a new investor, I think this is the best time to invest, because IT is overall in a bull run, so you can always invest. But yes, if you are thinking about a short term, please don't buy this stock, because it may be difficult that you may get a return in 1 month or 2 months. So guys, this was what my take was related to Infosys and TCS. Now you may tell, Tapan, what to buy. Infosys better to buy or TCS? I think both are at a good level, but Infosys from last few quarters has given a very good result. But yes, this quarter they literally bombarded, down from all the areas and everything. So earlier I used to prefer Infosys more, but after all this, I feel I give equal weightage to TCS, Infosys. So both you can buy. So guys, hope you got all the answers what you were asking for. And so guys, hope you like this video, and just type in the comment box whether you hold TCS, Infosys or not, and what is your decision at this level, whether you are going to buy, sell or hold. I have given my decision, so just think about that and let me know what is your decision. And guys, stay tuned and do like this video, and I'll see you soon in the next video.